Good morning, listeners. I'm Noah Mercer, and you're tuned into the FinMonkeys morning brief. We've got a packed show today, from a fresh the Fed statement that's rattling the risk outlook to some surprising earnings beats that are keeping the market's engine humming. Let's jump in. First up, the Federal Reserve just released a statement flagging rising geopolitical tensions and a sudden oil price spike as headwinds for the economy, a reminder that external shocks can still shake markets. Next, MarketWatch's latest analysis points to traders stacking up a bet they call the NACHO trade, betting oil stays high and inflation sticks around, which could keep rates higher for longer. Finally, a Bank of America note suggests the Fed won't start cutting rates until at least 2027, pushing the timeline for any relief way out, a shift that matters for anyone holding long-duration bonds or planning big financing moves. The Fed's caution dovetails with what we're seeing on the trading floor. Investors are piling into the so-called NACHO trade, betting that oil prices stay elevated and inflation remains sticky. That scenario feeds into a narrative of higher rates persisting, which is exactly what the Bank of America research note is flagging. They see the Fed holding rates steady well into 2027. Together, these pieces paint a picture of a market bracing for prolonged higher borrowing costs, while also watching for any flashpoints that could send oil prices soaring even higher. Even with that macro backdrop, earnings have been the bright spot keeping the rally alive. A slew of corporate reports just came out, and they're all showing stronger than expected profit numbers. Those beats are lifting sentiment across sectors, reminding investors that solid fundamentals can still drive the market forward despite the rate risk chatter. On the regulatory side, the SEC is making moves that could reshape the crypto landscape. Chair Paul Atkins is pushing for a set of rules that recognize the unique nature of on-chain trading, aiming to cut through the current uncertainty. If those guidelines land, we could see clearer pathways for crypto firms and potentially a new wave of investment into digital assets, all while keeping investor protections in place. That's the FinMonkeys morning brief for today. The next thing to watch is Fed commentary, and SEC crypto rule details will guide market sentiment. Thanks for listening to FinMonkeys. We'll be back tomorrow with the next market setup.